when our daughter needed baby food, my husband and I were out collecting cans. And it was just like, this is just not the way it's supposed to be. I ended up falling in love with the stock market. A lot of times it was so above my head that I would go and try to figure it out. And I kept learning a little bit here and there. But a lot of people had such high amounts in their stock portfolio. I'm like, I can't relate. I understand not being able to put a whole lot in. That's where I'm at. Some people might be like, oh, you only put $50 or, oh, you only put $200. It's like, yeah, that's what I can afford right now. Who knows? Maybe later I can afford more, but I got to get started.
Investors, welcome back to another go-round worth of Masters of the Market. This week, I'm incredibly excited to have on with me Chelle from Leaving the Hamster Wheel to talk all about her investment journey thus far. I want to get started with the first question and just dive right in. How'd you get to where you are today?
Well, I think it really started with just how I was raised. I had both my parents on opposite ends of the spectrum. My mom was definitely a saver. We went somewhere, it was like, here's your limit, how much you can buy. And then she always talked about money and how much we didn't have. And then I had my dad on the other end, and he was just more like, whatever you want, spend, it's all good, we'll figure things out. And so it kind of gave me a good balance of, I knew how to save, but I also knew that it's okay to spend. Like, I got started early with a credit card. My mom signed on it because she's like, you got to build your credit. But I didn't know anything about investing. That wasn't something that my family talked about. We didn't pay attention to the news, nothing like that. And then I married my husband, and he was on the spectrum of dad bought him everything. He didn't understand about money and stuff like that. So we ended up getting married, and we had the debt and stuff like that. And we ended up living and having to go to the grocery store and pay with a credit card, but not paying it off. And it was just that cycle, and it just kept getting further and further in debt. Then when we had our daughter, thankfully we had my parents that were just like, come live with us while you guys get on your own 2 feet. But we were still like trying to figure it out on our own. And one thing I just do remember is that when our daughter needed baby food, my husband and I were out collecting cans. And it was just like, this is just not the way it's supposed to be. But, still didn't know a whole lot. But fast forward to moving towards the stock market and having a portfolio and stuff, I asked my husband, like, I don't even remember how it really got started. He's like, no, it was all on you. I said, all I do remember is that we were sitting down at the table, and I said, I really would like to do this. And at this point, we were doing okay financially. So he's like, we have some money. Let's go ahead and put $1,000 in. And he's like, and I want it to be your thing. So I ended up falling in love with the stock market, and I love money. I am definitely money driven. I do lots of side jobs at work and stuff like that. And it's just, that's how I do it. It's like, oh, I get paid for that? Yes, I will do that. So I fell in love. I started learning about the stock market. And then when I went to YouTube, it was more like, because I was watching a lot of financial advisors and stuff like that. But a lot of times it was so above my head that I would go and try to figure it out. And I kept learning a little bit here and there. But a lot of people had such high amounts in their stock portfolio. I'm like, I can't relate to that. Decided, like, let's do YouTube. I kind of wanted to do it for some fun. And my husband was like, you should do finance. We know how to do it and stuff like that. We can share our tips. And so that's kind of how that got started.
Absolutely. I want to go back, actually. So you met your husband, and your husband wasn't necessarily on the same, I want to say, like, money or financial train as you were. Was that an issue at the beginning, or like, how did that talk come about where it's like, hey, we need to really rein in our finances and get this under control?
It was never an issue. Like, money wasn't an issue. I think it's because we didn't have much, but I think because I was raised with it's okay to spend, but also save. So I would try to do a little bit of the saving and stuff like that. But we were both just at this point terrible with money. So, it was just, we were feeding each other negativity with money, because I learned how to save, but I still didn't learn a whole lot about money. I just learned that you don't have enough. You don't have enough. And with my dad, it'll just happen. You'll be fine. So yeah, it wasn't a money issue. Like, I know that sometimes is a big thing in marriages. It started though when we started saving and stuff like that. I would just kind of like, hey, I would like to see if we can put some money more into our savings. This is I've been learning about this. And so my husband was pretty much on board, like, oh, okay, and he has changed quite a bit with his spending, because it used to be when we were in our early years of marriage, it was like vehicle. And then, oh, I'm tired of this truck. Let's go get this truck. And I was just along for the ride. I didn't think much of it. I was just like, all right, well, we just paid bills all the time. That's just the way it is. And then I don't know. It was one of those things like it just kind of like for both of us just evolved slowly. But I was definitely more of the one like I don't want to do this. And then I just realized how life was so short. And I think this is what really pushed the money. Like I want to start the stock market. I really want to save. Is my dad died unexpectedly, and I was like, man, life is short. And I just see people, and that's why leaving the hamster wheels, because like you go to work, it's like my husband and I always talk about, it's the same thing all the time. I want to be able to do what I want to do, and if I want to go and be productive as a job, it's by choice, not like I have to do it. We're definitely still on the hamster wheel, but it's always working towards that.
Sure. But you're on the journey to get off the hamster wheel, which is the most
That is
important
it.
thing.
Yeah. Yeah.
Chelle, I want to ask you, when you first approached the stock market, because I actually just had this conversation with someone just the other day, how intimidating it really can be. I mean, you're starting from scratch. The vast majority of people aren't starting with, hundreds of thousands of dollars. They're starting with maybe $5, $100 here, $100 there, $5 where they can.
Hmm.
How did you overcome that intimidation factor and just jump into the market? What made you feel comfortable enough to do that?
I think it was being naive, to be honest. When I sat down with my husband, I was thinking like, I really want to do this. My mind went to $100. So I was just thinking $100. And so my husband's like, yeah, I think so. And he's like, what about $1,000? And I was just like, wait a minute, what? Really? 1,000? And he's like, yeah, we have the money, because at this point we were really starting to do a lot better. We've learned a lot about finances. And so I was like, okay. But we went ahead and spent that $1,000. And thankfully, my husband, he is extremely smart. And where I'm the type of person that it takes me a little bit longer. I have to process a lot. I have to do a lot of research. And he just has that natural giftedness of just being very intelligent. So he's like, oh, let's go ahead and put VTI. Let's put, I think it was 700 we put in there. And then I didn't know anything about the stocks. I just knew the companies and I love them. And so we put the money in there. And thankfully, there was more into the VTI because that ended up being definitely more profitable. In fact, the other two I lost a lot of money on, but it wasn't that much. That was one thing my husband, Mark, was like, we don't put any more money than we can lose.
It's an amazing rule of thumb that I think everybody should really, put forth when they approach the market. It's even like spending. If you don't have the money to spend, don't spend it. If you don't have the money to lose, don't gamble with it.
Exactly.
I want to ask you, so your first investment, it was VTI? It was a total
VTI,
stock
and
market?
then, yeah, Beyond Meat and Oatly were my other two.
Okay, and so $700 went into VTI, and then you had a split between the other two?
Yeah, it might have been because it's been a while. It might have been 600, and then 200 for the other two. I think because I know it was a total of 1,000, and I know most of it went to the ETF. So it was probably the 600 and the 200 and 200.
Okay, so let's jump into how you evolved from there. You went from VTI and two holdings. How did your portfolio evolve, and what type of investor would you classify yourself as today?
Well, it evolved by like I kept Beyond Meat and I kept Oatly for quite a few years, hoping that I could recover my losses. And so when the money would, the stock price would go down, I put some more in, because I was so under, it didn't matter where it was really at, but it was just falling. And I was thinking, will it go up? Will it go up? So then from there, I was like, oh my gosh, I have learned so much about just not putting money into, oh, I like this company, but really finding out about the company. So after that, I started to try to balance it out. I started going with the blue chip stock. So I had put like Kellogg and Conagra and, just those ones that like were pretty stable. Didn't provide a whole lot of volatility, just kind of pretty stable, just to help balance it out. And so that was one thing I started doing. I started looking more at Yahoo Finance, looking at the history, just getting a little bit more information, listening to financial YouTubers, and just kind of learning as much as I can. I did go into a little bit of crypto, but it's not that much. I talk about it, and I still have the three that I started with. And so I have a little bit of risk there because for this, our stock market, it's not our retirement. We already have a retirement. It's more of just kind of like, can we make some extra money? And I would love to be able to retire a little bit earlier. I want my husband to retire early because he'll tell you all the time, he is broken. He's always sore. Body parts are hurting. So just kind of like just doing that and kind of where I'm at now is, it was last year actually, it was 2024. I started looking at it and going, what is my goal for the stock market? Because I know I want to make money, but I didn't really have a plan. I just knew I put money, like in 2024, it was, I want to reach, I think it's 3 shares in T-Mobile, so I'm like, okay. And then at that point I looked at Apple and went, well, wait a minute, Apple's a good company, but because I don't have that much in, I'm not making that much for dividends. So sold Apple, put it into something else. And so it has now evolved into more of a dividend investing. I've always been long term. I don't do short term, not day trading. I don't have the time for that. So I've always been long term, but it definitely has more evolved into focusing on the dividends. And that's what I would say right now is I'm dividend, but I do have some that are just growth, like I have Excelis. And I'm right now weighing another one, which will be one of my videos upcoming about, do I buy ELF even though they don't have a dividend, or do I, because it's one that I've wanted to have for a while, and right now the stock price is down.
So a dividend investor over time. You had to find yourself a little bit as a dividend investor, though. It's some trial and error, which is pretty typical amongst investors. I mean, you have to first jump into the market, and then everybody kind of finds their footing within the
Yeah.
market. So what were some of the ways in which, and I call this the investor profile, right? It's like we really got to get to know ourselves. What were some of the ways in which you were able to discover yourself and your investor profile that made you feel comfortable over time, and then, of course, evolved into being a dividend investor?
Oh, well, finding out myself is like, I can learn this stuff. I'm definitely one that is a slower learner than maybe someone else, because I don't have a whole lot of background knowledge in finance. Like I had mentioned in my past, my parents really didn't talk about finances except for we didn't have enough money. But I didn't learn about, dividends, or we didn't pay attention to the news. So just learning how everything impacts our economy, the stock market. So I've learned that don't be afraid of the stock market. It's going to have its ups and downs. So when I do see one of my stocks kind of going down, I know that I've looked into making sure that was a solid company. I feel really good about it. But I also know if it's starting to go down, I can pull out and take my money and the profits and stuff and go somewhere else. And I think that's kind of just through the trial and error, learning to that my ultimate goal is I want to focus on the dividends and not so much about like if the stock goes up high and I can take the profits, more like the long term. Can I get to a point where I can just use those dividends to live off?
So one of the questions I always ask everybody who jumps on Masters of the Market, depending on where they are and how they're investing, is why they specifically chose their investing strategy. So in your case, I mean, we're talking a lot about retiring a little bit earlier, and everybody always, as I always like to say, get rich by Tuesday. So get rich just a lot quicker than we all think it's possible. Why not just go all growth, right? Why not go into these tech stocks, or you mentioned Bitcoin? Why not take a risk, go in on Bitcoin and see what happens? Why dividend investing? Because that's a little bit of a slower route.
Well, I think it just makes me feel more comfortable. I want to be able to just go to bed and not worry about it. So I'd rather be a little bit slower. My husband and I, we talk a lot about at some point we want to retire outside the country. So it's like, okay, I won't need as much because places are cheaper than the United States. So I think that's it. I think it's just kind of like, I just feel more comfortable. Like I said, I don't really have the time to watch the stock market. And if something like I put a lot of money into one stock or 2 stocks and I don't invest that much, I have more risk of losing a lot versus if I just stay with the dividend and it goes up and down a little bit.
Sure. So really looking to get to sleep at night. I couldn't agree
Yeah.
more with you. I want to talk about how you've built out your portfolio now. How many positions are in your portfolio currently? How many ETFs are in there, if you have any? What does it look like? What's the total value? Give us the whole rundown.
So thankfully I did some notes because I am the type of person that my brain will go blank on the most simple questions. So I have a total of 15 positions and 3 of them are crypto. I have Doge, and so I have about 1,300, almost 1,400 coins. And my total value right now just for that is $378. Then I have Bitcoin, and that's not even that's not even one coin. It's 2 thousandths, sorry, of a coin. So I'm only at $257 profit there. And then Ethereum, I have 300ths of a coin. And so that one is just like $93. And then I have T-Mobile, which was my husband and I kind of talked to that one together. I was just like, what do you think we should get? And he's like, let's do T-Mobile. He felt really good about that one. And he was smart because that one's doing well for us with a market value of 815. And Kellanova we have, and that one is about 3.46 shares. And our total market value is 283. And I have not been putting any money into that one because I know that Mars will be taking it over. I'm just waiting for that. And I think it's like they're going to pay the shareholders, because I'm close. I think it's 83. I don't remember. I don't want to say. But I've been kind of just waiting to see if we actually go above what the Mars was going to pay for. And if so, I was going to pull out early. But that has not happened. Been keeping an eye on that. And then Conagra, we have 5.5 shares. Market value is 139. So very small portfolio. Kroger, we have 3.37 shares and market value is 219. And I have 4 ETFs. So I have VNQ, because I did sell VTI. VNQ, I have almost 5 shares. I have 4.95. Market value is $454. VT, a little over 3 shares. Market value is $380. And then Maine, which a lot of people that are subscribed to me, they know I love Maine. It's a monthly one, and did some research and stuff. Right now, if you go, and I'm not sponsored by them, but I love Stock and Lock. It used to be in the good category. Now it's more just the average category, but I looked at everything. I'm like, I'm okay with where it's at right now. That was one that in 2024, I spent a lot of time trying to add more to it. And so market value there is $1,500. And then I have WK Kellogg, and that one was just the free when Kellanova broke off into the 2 companies. And so I don't add any money to that one at all. I just kind of like just keep it there. And so I'm not even at 1 share yet, but my market value is $16. And then I have Excelis, which right now is not doing really well, but the financials still look pretty solid, and Stock and Lock is still giving it a good score. And so I'm a little over 1 share, and right now I'm negative $64, but my market value is 88. And then one of the new ones that I added was Schwab US. That's what I used for the VTI, and 57 shares. And my market value is $1,598, and that one is also down at negative 89, but it's pretty new, so I'm always expecting that as soon as I go put it in, it's going to take a while for me to build up. And then Realty I have, and that one is right now 1.7 shares. That's another new one. Market value of $94 with a positive. And then my last one is QILD, and that one I'm at 38 shares with a market value of $718, and I'm positive $15 in that one. So right now my total I have is 7,138, but I have been in the long term been going up in the positive. So like all time right now, I am up 35.95%.
Which is all that matters at the end of the day. I have a good friend on YouTube who always said the scoreboard is really just your brokerage account. And if you're in the green, you've won. Now, of course, you're a long-term investor, so all is typically well over the span of time. A question that I do have for you, Chelle, is a lot of investors typically when they start out, they like to overload their portfolio with dozens and dozens of stocks. But you have only 15 holdings. So I want to ask you, was this like a game plan? You and your husband sat down, you said, let's myopically focus on like a handful or a dozen of holdings.
Okay, well, I got to the number 15 is I know I didn't want too many. I know I wanted more than just a couple because I wanted to kind of spread it out, be a little bit more diversified. And honestly, just listening to different financial YouTubers, and so it would be like, this is a good around, how many stocks, and you don't want so many that you can't keep an eye on them, I don't want too many because like I go to work and I do lots of side jobs at my job, so I'm getting home late. And so I want something that I could manage. I could go, you know what? I need to go check and see. I see that Maine is down right now, and let me go look and see what's going on, if I can figure out what's going on. And just, I think it's something that I can manage. Like if I had too many, I wouldn't be able to manage it. I wouldn't be able to pay attention to how that stock is doing in the long term. And going, I might lose a lot of money because I'm not paying attention.
And a follow-up question to that, how did you get to these specific holdings? So, I mean, there's thousands and thousands of opportunities out there, and every investor typically flocks to a certain type of stock or a certain type of name. But what it really comes down to, as we both know, is you got to look into the company whether you like the company, you know of the company, the metrics. What led you to these 15 holdings?
Some of them were, like the Vanguard ones was I started with VTI. So I really liked that they were someone that I could trust, the company and stuff like that, and the ETF. And I know that their expense ratio was pretty low. And so I was like, well, I want to focus more on my ETFs because I want to be more diversified. So I went through those. And I actually had another one that I sold about a couple of years ago was VUG because I was just like, okay, I'm kind of having the same companies in all these different ETFs. So I started to like kind of fine tune that. And so T-Mobile, I used to have Apple, like I said, and that one and T-Mobile were through my husband, just kind of like, what do you think we should invest in? And so first it was Apple, and then T-Mobile came along, and it was just something that we've always really liked T-Mobile. And I was like, okay, they're solid. And my husband's like, and I think they're really growing, so let's just give that one a try. And then I'm looking back at my stock portfolio so I can talk about other ones. Like I mentioned with Kellogg and Conagra and hold on, let's go to the other one. Kellogg, Conagra, Kroger. Those were when I was trying to save my stock portfolio from Beyond Meat and Oatly. And I'm gonna say I have nothing against the company. It just wasn't working for me. But like I still I buy the Beyond Meat products and stuff like that. So I was like, I like the company. It's just at this point, at this time, it wasn't working for me. So that was me just trying to save our stock portfolio because now it's like, okay, when you look at my stock portfolio, yeah, I'm in the green for the long term. But when I had those two and stuff like that, you would look and be like red, like I was dying. So that's how those came about. And then Maine was like, I really wanted to find a stock that gave monthly dividends. And it was just for the excitement of it and to grow. And so I started just doing some research. I really didn't know too many companies out there that did monthly dividends. And it was, I think, a Yahoo Finance article, and they just listed some different ones. And so I just started going through Yahoo Finance, looking at some information and finding out about the company. And I was just like, this one looks good. It had a good score at the time. And it still is one that, like I said, right now has moved down to average. But when you look at the finances, it's still pretty good. So I'm like, okay. And they're helping out small companies, And then with WK Kellogg, that one was just given to me. And so I just left it there. And then Excelis was another one where I was like, I had a lot of this was before I focused, I was going to focus on dividends, where I was just like, I wanted some more growth. Honestly, it was one of those things like, I'm going to keep it for the long term, but my mind was going, man, what if this one shoots up? That would be so awesome to take that profit. And so I started looking into Excelis, and I was like, I liked what they said and stuff. And then I had my husband look at it. I'm like, what do you think? Because this is going to be growth. And he's like, okay, this is about the people that they help people make chips. They were more diversified in what they do, and it looked pretty solid. I liked his stock and lock. They liked it. And then Schwab, that one, I think, that one was from one of my subscribers kind of suggested that one because they knew that I was trying to reach my goal for this year of 1,000, or in 5 years, $1,000 in dividends. So it was just one of his recommendations, this YouTuber. So I was like, oh, well, let me look into it. My mom has Schwab, so I feel comfortable with that company. So I was just like looking at it going, oh, a lot of people like this as an ETF. It's stable. So that's kind of how I went to that one. And then Realty, I want to say that was another, just someone recommended that one. And I happened to watch one of your videos and you talked about Realty. So I was just like, okay, I got that. That one looks good. And it was paid monthly, and I was looking more for the monthly dividends to try to, build my portfolio a little bit faster. And then QYLD, which I want to say that was the most recent. And that one was more of, again, I was learning about how to grow my portfolio faster and stuff like that, what I was doing. And another subscriber mentioned covered calls. Well, I told the subscriber, I don't feel comfortable for myself with covered calls, and because I'm like, I don't have time, I don't know enough, I don't feel like I'm enough knowledge in the stock market to do stuff like that. So it was like, well, there's ETFs and stuff. So I kind of looked at QYLD. There was another one no, he didn't do QYLD. He said something else. And I looked at that one. I think I did a video on it. And it wasn't for me. I was just like, I didn't feel comfortable. They weren't established very long. And I was just like, no, I want something that has been around a long time, And so I think I moved from there to learn more about different covered call ETFs. Probably use ChatGPT for what are some covered call ETFs. I use ChatGPT for a lot of information to learn, and then I go and I look at it myself. And I know some people, some of my subscribers are like, "Oh, that's not a good idea," but I'm like, you know what? I don't mind having a little bit of risk. I mean, they're I don't know if it's beta or beta. I still can't figure out how to pronounce that, but it was like it's 0.83 or something like that. I'm like, that's pretty stable. So I'm not really worried about that. It's not as volatile as I feel that some people might make it out to be.
So, Shah, how would you recommend someone who's brand new, I mean, really someone who's just in your shoes not too long ago, approach the market? Would you point them in the direction of the VTIs of the world? Would you point them in the direction of building your own portfolio with individual stocks right off the bat? Like, how would you, if you had a subscriber or, you're, I don't know, at a cafe and someone says, "Hey, I recognize you." Like, how should I get started? What would you share with that person?
I'd always start off with, I'm not a financial advisor. I even say that, like my daughter was just talking to me this morning. And I said, well, I think it's a good idea, but I'm not a financial advisor. But no, I would definitely say, if you have the money, you're okay if you lose it, then go with something that you seem a little bit more excited about. But I would still always recommend look at the company. Don't do what I do where it's like, oh, I buy their products, but I don't know how well they're handling their money, So I say go and look at it, get some other perspectives on it, especially if you're brand new. Go and just get some ideas from people, hey, I'm thinking about this company. What do you think of it? You're going to get people that like it or don't like it, but if they can give you some reasons why that's solid, then you can be like, or, look at Yahoo Finance. I don't know if they still do it, but they used to do if this is undervalued, fair value, or I haven't seen that on Yahoo Finance, but that was always something that I kind of looked at. But it could also go to the dividend history. Look at how much was their stock price going for? What was their dividend? Are they up and down? And I would say, basically, if you don't have the time to do a whole lot of research, but you want to be in the stock market, stick with ETFs. You're already diversified with all the stocks that they have, but if you have more time, like I have a little bit of time, so like in the mornings, I get up really early in the morning because I do a lot of stuff in the morning. So one of the things that I do is I kind of look real quick at how the stocks are doing. If you have some time, then yeah, do a little bit more risky ones, that are just the company by themselves. But if you have absolutely no time or you just don't have that much drive, but you want to be in it, then go ahead and do the ETFs.
So let's talk dividend yields for a second. A lot of dividend investors, definitely at the beginning, will aim for higher yielding dividend stocks, regardless of where they're at in their financial journey. Something I've actually been talking a lot more about rather recently is incorporating your investor profile and then obviously investing accordingly. So if you're younger, you might want to go a little bit more towards dividend growth. If you're a little bit older, you might want to go towards that dividend yield. I'm curious to know where you stand today. What's the ideal dividend yield range for you?
I'm right now because of I use ChatGPT, but I was interested, like looking at where our balance was in our stock portfolio. And at this time, when we first started, it was $50 a month. And I'm like, what do we need to do in order to reach the $1,000, in 5 years or less? And one of their recommendations was you need to get your dividend yield up to about 5%. No, 4%. 4%. And so at that point, I think I was like a little over 2%. So I'm like, okay. So that's why I did make so many changes, was I was trying to reach that. And so for me, I'm looking more at, I feel comfortable about 3%, 4%, but I do like higher if I feel strong about that company. So like QYLD, I think the last I saw was like 10%. But I learned right away from lots of financial advisors and YouTubers and stuff, don't get suckered into those real high yields because more than likely it won't be stable. That could be fun, but look more at their finances and look at the company and look at how long they've been around. I would say for me personally, 4 or 5%, somewhere in there. If you're lucky and you feel good about that company, it's higher. Awesome,
I was actually on a podcast the other day, and we were talking about when, like, that feeling of once you start to see dividend income coming in. I mean, it feels really good. But at the very beginning, you're talking about 25 cents, 50 cents, $1.50 of dividend income. What keeps you motivated in these earlier stages of rolling that dividend snowball in order to actually achieve what you're ultimately looking to achieve, which is retiring earlier for some financial freedom?
it has been moving faster than I thought it was going to. So that's one thing. Like I put myself as 5 years. So, and then I'm just like going, wow, these changes have been huge. So my dividends have increased so much by just these few changes that I've made.
You're talking about receiving dividends sometimes 25 cents, 50 cents, $1.50. And a lot of investors, me included earlier on in my journey, was like, all right, can you really get that excited over a 25-cent dividend?
Well, my personality is I get excited when I find a penny on the ground. For me, money is money. So, like, yes, like actually, no joke, yesterday we were grocery shopping and my husband was going in front of me, but I spotted a penny. And so I had to wait for some people to go by so I could pick up that penny. And he actually turned around. He's like, why are you so far back? I said, I found a penny. So for me, yeah, even the little bits, it's like, that's money. It's money that I didn't have before. So that keeps me going. But I definitely think that's why I've been wanting to go more with the monthly to kind of see it grow a little bit faster than the, 30 cents. Like Realty, I just got a dividend notification of like 31 cents. So, but yeah, that's what it's just money for me. I don't need to see I want to see huge amounts to keep me motivated, but I don't need that. So it's like, as long as it's growing, but I know that next month or the next 3 months, it's going to be higher. So that's all I really need. And I keep just watching it grow. Now, just like most people, I want to grow faster. But yeah, I'm this type of person. It's money. I'm happy.
Now, let me ask you this, because you shared that you were watching the account grow over time, which is what I think every investor does ultimately. But
Yeah.
would you recommend looking at your brokerage account every day, or would you recommend maybe taking a backseat approach, letting a couple days go by before you look at it again?
I think it really just depends on your personality. For me, I don't really get bummed out if I see it going down because I know that the market fluctuates quite a bit. So the last few weeks, it's been kind of in the red, but then I go, oh, but if I look at my all time, I'm up in the green. So no big deal. Now, before I had made all these changes and I added stocks and I just had the three with Beyond Meat and Oatly, I still wasn't sad. I just figured I had hope. Will it? Maybe it'll go up. Maybe it'll go up. As I continued every day to see it go down. But it never really bummed me out. I just like, okay, I've got to figure something out. So I'm going to continue learning. What can I do to help salvage my portfolio? And that's kind of how I looked at it. But I just really think it's about personality. So I know for myself, I'm okay. Like I'm the type of person that can weigh myself every day, just to make sure I'm staying on track and stuff like that. Where someone else, same thing with portfolio or scales, they might be like, no, it just bums me out too much. I'd rather look at it, a couple days or just forget about it and look at it monthly. Just really, I think it's about the personality.
Do you think there are any telltale signs about one's personality before they get invested? Just so once you're invested, you don't have that shell shock and maybe sell when you shouldn't be selling?
I think you just got to look at how you've handled things in the past. So, like I know some people, they could look at how do you handle if you get on the scale, if that's something that you do. If you see, like you're like, oh man, I went up 2 pounds, whatever, and you can't take the mind frame of, oh well, wait a minute, yesterday I had a lot of salt. Okay, if that doesn't enter your head and you're still like, oh man, I lost 2 pounds, or I'm sorry, I lost 2 pounds, that would be happy. I gained 2 pounds. If you're not able to take that and separate, go, wait a minute, I had too much salt. Okay, you know what? Let me just drink a lot more water today, and then tomorrow I'll be okay. If you're not able to do that and separate that, then you probably are the type of person that would be like, maybe you shouldn't look at it every day, because it's going to go up and down. You're going to have days that it's down, or months, or years, and then just kind of like ride the wave, or go, let me look at my portfolio. What can I do? Am I losing in something? If you're not able to do that, then yeah, I would say you probably are the type of person that probably shouldn't look at it on a daily basis.
So that being said, I want to know what you think the biggest mistake that investors are making continuously, or you could go with the most common mistake that investors are making that they should be avoiding.
I think I'm going to go with what I did too, was you just jumped into a stock without really knowing about that company. Just jumped in, you got excited. Maybe it's someone that, like you're hearing all the great news that this stock is going to, just go to the moon. And so you jump on that bandwagon, and without realizing that, oh no, it's just everybody's jumping in, so the stock price is going up. And then those people that are smart are going to be like, okay, now I'm pulling out and I'm taking all my profits. And then you're the one that's, naive learning about it. You're like, oh man, I don't know if I can curse or anything, but
Yeah.
like, oh man, I just lost all that money. And then it's like,
So in which case, let's talk about when to sell, because that's always, everybody always talks about when to buy, the ripe opportunity to buy. Now's the time to buy. What about now's the time to sell? How do you know when to sell a stock, whether it's going up like you were just sharing and you want to take some profits, or on the other end, if it's really not doing too well, the Beyond Meat in your case, how do
yeah.
you feel? How do you feel the wherewithal within you to actually sell?
I think for me personally, I kind of set myself little goals. So there's a few on there like that I want to sell. Like I want to sell Ethereum, but I'm like, it went up to where, like, was it 4,000? And so right now we're at 2,600. And so for me, I'm less like, I just want to get my value. Can I get it to $100? Because I still am making a profit. And so I think for me personally, I set myself little goals. Like if I can get to here, awesome. And if it goes up past that and I haven't paid attention, that's even better. And then I would say if you do see one that, you're like, that stock price is really going up, and it's way overvalued right now. And I think that it might just everybody pull out, and you're like, and I want to take the profits, then I would say, don't wait till, oh, it's going to get higher and gets higher. If you get to the point where you're like, hey, that's a pretty good total return, then I would say pull out, even if it does go higher. That's okay. You've already made gains. Be okay that you're not going to make more gains, because you could have that potential of it going on the downside and you're losing. So, and then on mine, where it's like, if you see it going down and you don't know that much about the company, then quickly do some research, see what other people are saying, and then, maybe put a stop loss on it and go, if it goes beyond this, below, I don't want to lose anymore, and be okay with whatever you lose. I think it just goes back to when you put your money in the stock market, be okay with losing it, because if you get money, awesome. But if you lose money, it shouldn't be something that's detrimental. You should still be able to pay your bills. It should be like, bummer. I want to say another word, but I'm just going to say bummer.
We'll keep it clean. No, I know the feeling of, look, be prepared to lose, because this way, if you do lose, it's not something that, you're jumping out of your seat for, and it's an oh my God moment. So be okay with losing it at the end of the day. And obviously, if you're investing well and wisely, it's going to be in the green over time. I want to talk about, at this point, now you've had some time in the market, invested, you've learned a whole lot. Is there anything that, knowing what you know now, you would have actually totally have changed up, maybe your approach, your strategy, the stocks within your profile, your portfolio? What are one or two things you may have just completely scratched out of your current strategy, if anything at all, because of what you've learned?
Well, I would definitely say I would not have invested in Beyond Meat and Oatly right off, because it's like, yes, I liked the products, but at that point, I didn't know enough about the finances on that aspect. And I think honestly, that would be the only thing that I would probably do differently, because Apple VTI they did great for me. You know, I was able to get profit out of it. And even with the cryptocurrency, I don't have that much. Obviously, we've already heard, so if I lost that, it's not that much. But it's been a positive thing. And when I first did get it, if I was the type that just was like, oh my gosh, I'm losing, then I wouldn't have the potential that I have right now, where it's like, it's even knowing it's in the red, I'm still up. So that still was a positive for me, is that I was able to just ride the wave and go, you know what, I just put the money in, more than likely it's going to go down. Or just knowing that there are some stocks that are going to have their valleys. And so like Excel is like, overall I feel pretty good, and right now they're in a valley.
So quite a few times, Chelle, you've actually mentioned, looking into what others are saying or doing your due diligence and the research. I'm curious to know, first of all, where are some of the places that you go for your research? But then moreover, when it comes to YouTubers or any, financial advisors who may be out there, whoever is out there in terms of who we're flocking to, how do we know who to trust?
I think for me, I just have to continue watching that person to hear what they have to say. So like the ones that I really started listening to at the beginning, and I still quite often listen to, and I'm going to get my YouTube so I don't mess up their names. But there's Clear Value Tax with Brian, and I don't know if my husband, because he's not really into the finances of watching and stuff like that, but that was one that I'd be listening to, and he actually ended up subscribing. And then Meet Kevin. I want to say Keep Kevin. Meet Kevin. And his approach is definitely not the same as mine, because it doesn't appear that he's as much into dividend. He's more growth and stuff like that. But I found him very interesting. And let me see, I'm in the wrong account. Then I have, I want to make sure I go to there, because my brain is going blank. So Andre Jink, I really like him. I've listened to you, and I always get his name mixed up. One of my favorites, and it was just because he was so down to earth, Dalton Litz. And then I'm like going through my stuff here, because I have a lot. I want to say Steven. He's a big one too. He's a big YouTuber, but I can't think of his name. Oh, Graham Stephan. So I really like listening to him. So I think those are the big ones that I still quite a bit listen to, and I've added pretty recently. Let's see if I can find him. And he's another one that's kind of small like me. I can't find his name. Oh, bummer. I can't think of him, but he's one that I would say in the last couple months that I've kind of been starting to watch and stuff like it, and subscribed. So, yeah.
I always think it's inspiring when I do see, smaller channels and those with the smaller portfolio, because actually that's how I started, right? Jumping onto YouTube just to show people the journey. And then all of a sudden you're amassing, the dividend snowball, you're amassing the portfolio value, everything's coming along. I want to ask you though, just based on where you're at right now and on both journeys, financial journey and the YouTube journey, what would be one message that you would share with listeners who are out there to just get started? I mean, keep motivated, because eventually you will see yourself where you want to be, but you have to get started. What's that motivating factor you would share with them?
I would say that it is, especially for someone like me, I'm not outgoing. I get really nervous, as we could probably tell from this interview. But just do it. Life is short. So, I mean, and even today, and not like I have a huge following or anything like that, but I still get nervous about comments. Like, is it going to be mean? Did I mess up? And so, but you just kind of get over that. And like, I've heard so many people say, if someone's being mean, you don't have to respond. You could block, And so just do it if it's something that you want to do. And that's really kind of focusing on, well, both. If you really want to do the stock portfolio, put a little bit of money in, see how it goes, see if it's right for you. And same thing with YouTube. throw a video out there. When I first started YouTube, I didn't tell anybody except my husband and daughter. And then my sister, she has a YouTube channel, and it's pretty funny because hers and I are totally different. Mine was about saving money and stuff like that, and hers is about gambling, you know? And I guess some people could say, well, it's kind of the same because stock market could be gambling, but hers is strictly going to the casinos. And so for me, I kept it quiet. But as soon as I found out about hers 2 weeks later, because we never communicated this to each other, was like, I felt, oh no, now I've got to share, because if she finds out that I already had a YouTube account and I didn't even share it with her, she'd be like, well, that's messed up. And so I would say just do it. And so even my daughter, after spending, I think, a couple months on YouTube, she's like, you know, Mom, you inspired me. I'm going to go ahead and do a YouTube channel too. And so we have those that just do it and see what happens. And if you don't like it, then you just tell people, you know, hey, thank you for following me, but I don't think this is going to be right for me. I know that there was a vegan couple that I watch, and the husband, he does YouTube, and his not husband, boyfriend, and his girlfriend was like, oh, I'm going to try it. So she started, and then she came back on his channel and said it just wasn't right for her, you know? And I'm like, what do you really have to lose?
I love that. What do you really have to lose is the key. And as you keep saying, life is short, so just keep going, keep trying. I want to actually jump out of the stock market talk a little bit and talk about frugality, or even talk about how to get the money to even invest. You mentioned that you've been doing some odds and ends jobs while at work or outside of work. Oh, we're reconnecting. You're still there?
Oh, um, yeah, I don't know if you can hear me. You kind of cut out. So I think what you're asking is, what are some of the other jobs that I do?
Yeah, I'll restart that. We'll jump
Okay.
out of the stock market talk a little bit and talk a little bit about frugality. You mentioned a couple of times throughout the talk that while at work, you're also doing some other side jobs as well, just to make some extra money, likely to invest. So I want to talk about that, coming up with the money to invest. What jobs are you doing outside of work? And how do you really, when it comes to frugality, find the money to invest? Because the big excuse a lot of people have is, well, I just don't have the money right now.
Yeah. I would say that, first of all, with where do I find the money to invest, is that I do, like I said, I'm money driven. So I have another job at my job, and it's called a SAT leader. And it just means a student assistant team leader. And so I just help teachers. I'm an educator. And so I just help teachers if they have students that are struggling academically or behaviorally. I help them out with paperwork to go and possibly get tested for if they need some special ed help. And how I got into that was strictly the money. I moved to this state, New Mexico here, and I was coming from Arizona and California where I had taught before, and I never heard of SAT. But I started at the new school, and you had to be part of a committee. And so I was just like scanning through the committees, and I saw this one, you could get paid. So I went to my principal, I said, hey, I'll do this. And so it's not at all a highly coveted job. It's a lot of work. But the only reason I did it was I got paid. So I do that. And then I've done summer school, and I tutor, and I'm also a team leader because you get a little extra money. So for me, that's how I find some extra money. And then one of our main focus and we just actually finished paying off at the end of the year of 2024, was we wanted to pay off my husband's truck because we didn't have any other debt besides our mortgage. And so now that we paid that off, now we have the extra money there. And so for people that are saying, hey, I don't have any money and stuff like that, well, yes, now I put in 200, but it was $50, you know, so it's like, okay, $50, but put $5, you know, if you can, you know, scrounge up some and just put it in there, because it'll grow. And then, you know, as you're paying off other things, you know, and this is one thing that I really say, is that when you're paying something off, figure out where that money is going to go afterwards, so you don't just end up spending it. So like when we would save some money, I'd be like, okay, great, where are we going to put that money once we're done here? And it was like, okay, we're going to put it here in the truck, we're going to pay extra here. You just kind of figure those kind of things out. And, I understand not being able to put a whole lot in. That's where I'm at. Some people might be like, oh, you only put $50 or, oh, you only put 200. It's like, yeah, that's what I can afford right now. And, who knows, maybe later I can afford more, but I got to get started.
I think that's the key. I've talked to a lot of people who always say, I'll get started I'll get started when I have 3K, 5K. And the whole point is start today, start now, even with, like you said, $5. I mean, instead of going to Starbucks or Dunkin' Donuts, wherever you're going, take
Hmm.
that $5 or $7 and start to invest it. Chelle, I'd love to ask you when it comes to macro events, I mean, there's a lot going on in 2025 already to kick off the new year. And with that said, do you factor in any of these macro events when you're investing? Do you look to the news at all? Do you really just shrug it off because ultimately, you're a long-term investor? How exactly do macros factor into your investment strategy?
I would say I know that for day trading and short-term goals, it's definitely important. And for me as a long-term investor, I'm more about the finances, the financials and stuff like that, but it definitely impacts. So like right now, technology, AI, chips, they're kind of like, very volatile. So I see Excelis, Excelis has a lot of products coming from China. So I'm like, I have to pay attention a little bit more to the tariffs. So like even a few days ago, my husband was looking at our account and he's like, what's going on with Excelis? And he's like, is it, tariffs and stuff like that? And I was like, yeah, I always kind of really keep an eye on it and see because if it starts really like they can't afford the tariffs or they really start digging into their assets and stuff, it might be something that we might not want to stick around and, wait it out. So, but yeah, for the most part, it's not a huge concern. I kind of like just let's ride the wave, let's see. But you also, if you let it go down and stuff, it might take a really long time to get back up. So then you might have to go, I really like this company, but I can't afford to lose this much money and then have to wait 10, 12 years, or more to reach back to the level that I was at.
So my last question for you, Chelle, is always a fun one to ask every master of the market who joins me here. But if I were to give you right now $10,000 to invest in any individual stock or ETF, wherever you want to put it, where would you invest that $10,000 and why?
Okay, so I think that I would probably invest most of it into QYLD. And the reason is because they have right now such a high yield. And so I get a lot in dividends every month. And so then I could just either take those dividends and then reinvest them in other parts of my stock portfolio or just continue to build that one. It would really depend on how well that ETF is doing. And so I think that's where most of it, and I would probably just spread it out a little bit amongst the others just to feel a little bit more balanced, diversified.
Sure. So, investors, if you're looking to leave the hamster wheel, go check out Chelle's channel. It will be tagged down there in my pinned comment and my description. Chelle, I want to thank you for joining me on Masters of the Market and sharing with us your investor journey. Now, investors, until the next go round of Masters of the Market, we will see you all there.